Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to cover the whole entire market in terms of S&P 500, Dow Jones, Nasdaq, specifically looking at the ETFs SPY and QQQ, which are the ETFs for S&P 500 and Nasdaq. I'm going to go over the economic calendar, 10-year treasury, crude oil, and so on and so forth. So before I get into terms of analysis, in terms of support and resistance levels and price actions, I'm going to go over the economic calendar, which for Thursday, May 9th, 2024, at 8:30 a.m., we're going to have initial jobless claims. At 2 p.m., San Francisco Fed President Mary Daly is going to speak. Definitely an interesting day today, by the way. For the most part, it's just getting at those limits. So I'm going to show right about here. If you look at QQQ, QQQ is probably the best representation in terms of showing we're at the limits and we're pretty much waiting for a breakout to either the upside or just get knocked down. But then actually one thing too, so I should probably go over the 10-year treasury quickly before I get into everything. So 10-year treasury is sitting at 4.5%, so still pretty much lower than the past few, like let's say week or so. And then crude oil is at $79.22 per barrel. And then if we look at QQQ, from last time what I've stated with a downward trend resistance line right here in the last few videos, we had 3 touch points right about here, went up, got knocked down, went up, got knocked down, had a false breakout, and then went down and then bounced off a bunch of support levels. But with this downward trend resistance line and this upward trend resistance slash support, which has a touch point here, resistance, support, 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 resistance, we're pretty much colliding and we're not necessarily passing them. It's just pretty much subsiding. So this whole entire day was just sideways, the whole entire day. And then the thing is though, will it break out? It depends, because the problem is we have CPI and PPI, which is inflation numbers, coming out mid next week. It could just pretty much go sideways the whole entire time. We do have earnings as well still. That could play a role. We do have like potential tensions in the Middle East and all that stuff. So it's almost like it's waiting for a direction to happen in a way, like a catalyst to dictate a direction, in my opinion. Now, if we look at the long term kind of shows that we're potentially going to go back up to the upside in a way. So to just pretty much show for the new viewers, since 2010 we had an upward trend resistance line a bunch of times dating back since 2010, upward trend support level, broke through 2020 and 2022 for the Nasdaq, but then came back underneath and got knocked down. And then the 1 year is in the bullish movement, showing upside. So technically not necessarily the short term, but somewhat in the long term, obviously going to go up, just like we have since 2010 technically, if you really think about it, right? Or not technically, but have been going up. But the problem is in the short term, the indications are to the downside a little bit. So for example, 6-month MAC line, it's the red bar has become even a darker red bar, so showing that the downside will get pulled down. Now I'm going to cover the support and resistance, but just to show all of them, 3-month as well downside, and 1 month crossed back into the bullish bearish territory. So if you had to guess just off the technicals and not like fundamentals or news, technically it might not break through, and it's showing that it's going to come down in terms of short term, which is where we're at right now. Now, if it was to go sideways, basically for the most part, we're looking at hovering between, let's just say based off support levels and everything, in the range of like the $435, $434 price point, all the way between with this downward trend resistance line, the 440, maybe 441. But then if you think that this upward trend support level slash resistance, mainly, it's actually going to act as resistance anyway, is the actual guiding point. It depends on when we hit it, but basically all the way up to, okay, so last time I checked, it was about, so there's resistance at the 441, 442. Right now we're at $440.06. Closed that, that's what we closed at. But after hours, we're at $439.37. But there's resistance at the 440, obviously, but then 441, 442. But there's strong, and 444. But there's strong resistance at the 446 to 448 gap. Pretty much we're going to be hovering between either this resistance level and then break out and then get brought down by this resistance level. And right now, let's just say in terms of time frame, so from now till Monday, basically we're looking at the cap of pretty much about $444, give or take. I'm pretty sure it'll break out to that. So $444 and some change, and then all the way down to, what is it going to say? The earlier number that I gave, about 434, essentially, because it's showing 436, but I think we've come down to the 434 support level. That's pretty much horizontally a bunch of times bounced off of. Now, these moving averages could be in play, but I don't know. besides technical, so I'm going to cover them only because technical shows to the downside, but in terms of fundamentals, I don't see a reason unless I guess a bunch of earnings come in and they're all horrendous company, like all the companies that are being announced throughout the days, right? But if they do, then we do have support at 435 obviously, but the 432, 433 gap is quite a bit of support. I could see us pretty much consolidate around that price point, and it coincides with this moving average 433. So again, 432 and 433 and some change, and then ultimately the 430 is quite a bit of support, but then it constantly breaks down to the 429 and some change, and then I guess basically the 428 as well support. So that's pretty much for the downside. Now to the upside, the thing is though, it has to break these resistance levels in my opinion, and we can see pretty much it's hovering around these price points, right? And then there's going to be false breakouts. So essentially we have to pass, currently for example, the short term, we have to pass about the 440, which multiple false breakouts anyway. So the 441 and some change I would say, and then essentially pass 444 and some change. So if we pass those, then potentially we could start getting to the upside. But the problem is that's very close. So if we're in the 446 and 448 before CPI, then we're poised for a breakout completely. In my opinion, I don't think it'll be a false breakout. It'll be a potential good breakout if we're in the 446 to 448 range, especially if we pass it, because the all-time high for QQQ, which is an ETF for Nasdaq, is at the $450 price point, right? So that is the all-time high. Let me just go to all, and you can see that's where we're at pretty much. So we're pushing the all-time highs. That's the problem. So we're at the resistance levels plus approaching all-time high resistance. So it's quite a bit of a challenge. Now in terms of SPY is almost basically showing the same thing in terms of the overall movement. So in terms of long term, it's showing either curving up to the upside in the bullish for the 1 year, and then the 6 month, 3 months, 1 month, all pointing indications to downside. You can see right now, I believe I'm in the 6 month. Yeah, so 6 month is showing downside, bearish movement, 3 month downside, bearish movement, and 1 month downside, crossing over to the downside, bearish movement. So still bullish, I guess, for the time being, but it will be crossing down anyway. But yeah, so same thing applies for the S&P 500. Since 2010, upward trend resistance line capped at support level within this channel the whole entire time. Now we do have room to grow for the S&P 500, but it depends. They go in sync for the most part, Nasdaq and S&P 500. Obviously, Nasdaq is a little bit more volatile to the upside and downside, more reactive since it's more of the tech sector. But for the most part, green days, they coincide together for the most part. Upward trend support level for major drops. And if we go into the actual levels, so right now we did cross the downward trend resistance line where it was the same thing for QQQ/Nasdaq. Multiple touch points failed to cross, but now this time it actually has crossed as opposed to the Nasdaq. And the thing is though, are we going to continue that to upside? The thing is though, I think what's going to happen is just going to replicate Nasdaq's movement for the most part. So if Nasdaq stagnates and consolidates the whole entire time, we're pretty much going to consolidate, and essentially we have to pass right now we're at $517.19. After hours is at $516.95, but we basically need to pass $518 and some change. But for the most part, we're going to be stuck between $518 some change and $515. But the problem is the $515. There is, like we saw today, for example, it was like $514 and some change, so around the $515 price point. There is support, but it's not that strong. There's predominantly a good amount of support at the $511, $512. And then if that breaks, we still have a good amount of support at the $510, plus it hits the moving average as well. And then we have this downward trend resistance line that, in my opinion, is going to act as support. Are we going to break the $5.9 and some change and $510 range? Or, for example, if we were to drop down, hit this downward trend support/resistance level showing $5.8 and some change? I do not think so personally until, again, by mid of next week where CPI numbers come in. If they're worse than expected, I could see us drop. If it's better than expected, I don't think we're going to see those levels. But for the time being, it looks like if we were to be in a pocket, basically, we're looking at 515 or 514 and some change, and then to 518 and some change range, give or take, and then just consolidate within this range. Worst case, around the 511, 512, or the 510 and 59. I know I said worst case, but what I mean is just like those are the levels that would trickle down to, and then hopefully bounce up to the upside. Even those downward trend resistance lines showing 508 and some change, and maybe bounce off that, which would coincide the moving average by the time we get there too. So there's that. Now to the upside, Again, 518 and some change is going to be resistance. Then the next is 520, 521, $520 is some resistance with the horizontal resistance spikes that I've seen. And then in terms of the high side, so there is resistance at the 423, 424, but ultimately I think what's going to happen is we would go back to the selling point with the all-time high of $426. So if you look at the 5-year chart, we're at an all-time high approaching level too. So not only resistance levels, but all-time high. So if once we pass, either we get knocked down hitting the 526, just pretty much touch it, spike up a little bit higher than it, and then get knocked back down, and then try to create a new all-time high another time. But it all depends, in my opinion, again, based off inflation number. The reason why we're worried about the inflation number is if they are better than expected in terms of lowering, like inflation slowing down, there's more of a chance that the Fed will cut interest rates, which is what the market is hypothetically more focused on overall. And if it's worse than expected, there's less of a chance that the Fed will cut interest rates. The market is expecting one interest rate cut, even though in my opinion, I don't think one's going to happen. But if one does happen, it's literally the Fed, in my opinion. By the way, this is all just my opinion, so please do your own due diligence and research before buying and selling. But I think they're only going to cut interest rates to satisfy the market for this year if they were to cut one. And it's going to be closer towards the end of the year. Again, this is just my opinion. But either way, so if it's better, then they will. If it's worse, then they won't, which the market will react negatively to. But yeah, so then there's that. Now for the Dow Jones, just to cover quickly, again, I've shown this before, resistance, support. We technically did not bounce off the support level, but we got close and heading up to the upside. Now, the Dow Jones is a little bit more positive in terms of the S&P versus Nasdaq and all stuff, but 5-year chart showing the same thing, curving up to the upside, technically soon, hopefully, not soon, but it's long term. And then the 1-year chart is in the bullish territory, 6-month chart is in the bullish, and it kind of looks like it crossed down to the bearish, but it's not really there. And then the 3-month trying to curve up to the upside, and then the 1-month going to the bullish. So to Dow Jones, it's looking like potentially you're going to be going to the upside. So if you were to think that the Dow Jones, because it's bigger caps and all that stuff, technically will carry the market, then if not tomorrow, the day after tomorrow, so Friday. But Fridays tend to be on the low side. That's the only problem, because like option contracts close and all that stuff. But I don't know. But there is daily contracts too, so it tends to be less pull now. But either way, so if anything tomorrow, it's going to consolidate for the whole entire market potentially again, just like we've seen pretty much today, maybe a little bit bigger of a range, and then by Friday could be bouncing back up, or it could be 2 consolidation days and then by Monday bounce up. But the problem is then you're getting close to the CPI and PPI numbers in terms of inflation, so it's a very tricky time. That's the only problem. But if we were to go to the upside, to the max side, I'm just going to cover the max because I don't really think too many people cover the Dow or trade the Dow Jones. But we're looking at right now about 40,062 points. And then to the downside, if we were to drop dramatically, we're looking at 37,483 points, give or take. These are just ranges for the most part. And we're at right now 39,056 points. But obviously it would hit support to the downside first, which would be, you could see a bunch of touch points right about here anyway. Give or take about 38,469 points, plus hitting the moving averages at the same time. Moving average here is at 38,845, 38,469, and 38,303. So it's quite as way. And then in terms of resistance to the upside, it would be difficult to pass about 39,310. So about a little bit, almost 300 points to the upside. But that's basically it for today's video. Hopefully you guys enjoy it. Hopefully you guys like it. If you do, consider dropping a like. It does help out the channel, so thank you so much for that. I do appreciate it. And thanks again for watching on X and YouTube. See you guys later. Take care. Peace.